For the last 3 decades, Knowledge Center at Bursa has offered technology, resources, services, space, and a sense of community. Since 1985, 14,000 titles have been collected, with care and attention to high financial literacy standards. In collaboration with a global community of institutions, we ensure access to the world's diverse intellectual and cultural economic heritage, as well as fast online services for connectivity to the financial world. Serving the Bursa Malaysia community and beyond, Knowledge Center at Bursa empowers you in your trading and investment analysis research.
Financial information at my fingertips.
Visit Knowledge Center at Bursa Malaysia today for the collections, for the services, for the sense of community.
You have suffered financial loss while investing, and you think your bank, broker, fund management company, unit trust management company, PRS provider or distributor, or their agent or representative is responsible. You need help sorting out the problem or want to seek redress. Where do you go? Sidrek is here to help you start the conversation and reach some resolution. First, lodge a formal complaint with a company that sold or offered you the unit trusts, shares, derivatives, or other capital market product or service. But you're not happy with their response. You have 180 days from their final written reply to come to Sidrek. Or if there's no written response, and it's been 90 days since you wrote to them, you don't need to wait longer. You may come to Sidrek even though you haven't received a final response yet. Sidrek first checks the eligibility of your claim. For example, is it within Sidrek's claim limit? Is it against a member of Sidrek? And so forth. If your case is eligible, we begin the dispute resolution process. All information in this process is confidential. We get both you and the member you're complaining against to sit with us and have a conversation. Documents and information will be required from both parties. No lawyers are allowed in the mediation process, as we keep the discussions informal and private. Our mediators are impartial and will hear both sides out and help parties communicate constructively towards resolving the dispute. Two outcomes are possible at this stage. Either both you and the member agree to a settlement, or you don't. If the both of you agree to a settlement, an agreement is signed and the mediation process ends successfully. But if both you and the member fail to reach a satisfactory resolution, mediation has thus failed. But don't worry, Sidrek then proceeds to the next stage, adjudication. During adjudication, parties are given the chance to provide any further information to help their case and ask each other further questions. Our adjudicator will then study and consider all facts and information provided, including the conduct of the parties, laws, and best industry practices, as well as what's fair and reasonable. Sidrek's adjudicator will then make a final decision on the dispute and the monetary claim. If the decision is in your favor, it could be a full award or a partial award for your claim. But if the decision isn't in your favor, then no award will be made. You, the investor, will still have a choice. If you reject the decision, Sidrek will simply close the case and you may seek other legal avenues for redress. If you choose to accept the decision, however, the member has to comply with it. Once the parties have confirmed compliance to the decision, Sidrek will close the case. So let Sidrek help start the conversation towards resolution. For more information, visit sidrek.com.my or call 03 2282 2280.
Hello, everybody. Welcome to this webinar brought to you by Bursa Malaysia. Today, our webinar is titled, There's No Better Way Than Going Back to Basics. So welcome everybody to this session. My name is Shane Chu. I'm the moderator for this webinar. In conjunction with the International Women's Day, this month we will feature as many women speakers as possible. Women power. Okay, today we are very honored to have invited a manager from Maybank Investment Bank of the Equity Derivative Group to share with us about this topic. There's no better way than going back to basics. So today, the topic is essentially about warrants. Disclaimer, whatever we share on this webinar is only for educational purpose. So in no way that we give any recommendation for you to buy any or sell any listed securities that we mentioned here. If you decide to make any investment decision, you're 100% responsible for all your investment risk. Allow me to introduce our speaker today, and she is none other than Amy Ng. Now, Amy Ng joined the banking industry in 2013, beginning her career as a market risk executive prior to joining a top advisory firm involved in financial risk advisory services for financial institutions. Since returning to the banking industry in 2018, she has been building on her equity derivatives knowledge and is no stranger to structured warrants. Amy has close to 5 years of experience training and providing warrant insights to a vast range of investors, be it seasoned warrant traders or new warrant investors. Amy holds a Bachelor of Finance degree from La Trobe University, Melbourne. She joined Maybank Investment Bank in 2022 and is currently a manager in the Equity Commodity Derivatives Division, which is a leading issuer of structured products and structured warrants in Malaysia. So welcome, Amy.
Hi Shane. Hi everyone.
Yeah, good to see you again.
Yeah, good to see you.
Yeah, are you all pumped up for this session?
Yeah, all pumped up. I'm hoping everybody is pumped up as well.
Yeah,
especially
I'm
on a weeknight, right?
Yeah, I'm sure they do. So without further ado, let me hand over the session to you so we can learn about the basics of structured warrants. Over to you.
Okay, thanks, Shane. So I'll just share my screen with everyone here. So Shane, you can see my screen?
Perfect.
Yep. Okay. So again, thank you everyone for joining myself and Shane here. Of course, as Shane mentioned, I've done this for 5 years, been in structured warrant space for 5 years. So without further ado, if you are new here, welcome. If you have joined any structured warrant sessions before, hope get to gain new knowledge about structured warrants. So again, thank you for joining me this lovely evening on a weeknight. Understand some of us may be exhausted from a day of work, and it's amazing to see the enthusiasm in learning more about investments. So I'll try to go as slow as possible at a relatively okay pace. So without further ado, let me just run through on the topics that I'll be covering today. So I'll start off on the overview of structured warrants. So the bulk of the whole session, which is knowing what structured warrants are and diving slightly deeper into the world of structured warrants, while after that, going into knowing what are the 6 components of structured warrants, looking from an issuer's perspective, and also then I will end it with the structured warrants journey. So when it comes to structured warrant journey, I will share with you a general rule of thumb of how do you select the structured warrants, but at the same time, thanks for joining today, because there will be a special segment where I'll be sharing it from my personal perspective on how do I actually choose the structured warrants and trade these products in the market. And lastly, of course, I'll end it with Q&A sessions, where about 20 minutes Q&A session. So feel free to drop any questions as we'll have the end to wrap things up with a Q&A session. So enough said, let me begin with the overview of the structured warrants for the past 3 years. So as you can see from here at the graph, where I'm actually showing structured warrants monthly outstanding volume versus a KLCI performance. So as you can see from this slide, pre-pandemic, which is around 2019, the structured warrants sold in the market was at a much lower level as compared to during the pandemic years. So before 2019, sometime in January 2019, you can see that the warrants outstanding right there, which means the warrants that are being sold in the market and investors bought these warrants are at a relatively low volume as compared to during the pandemic session. So I would like to call this the pandemic effect. So the interest in structured warrants spiked during this period. As you can see that the structured warrants sold on a monthly basis is more than double as compared to the pre-pandemic levels. So various reasons to this is probably because structured warrants is a financial instrument which requires a much lower capital as compared to buying the underlying shares. So more investors are looking for alternative trading opportunities to ride on the market volatility. With the uncertainty revolving around the global and local market and economy, investors tend to look at a more short-term investment rather than a medium to long-term kind of financial instruments. So the uncertainty continued to roll over to 2021 and 2022. As you can see, the warrants volume started to dwell down around 2021. Markets were rather subdued. Global economy were looking at ways to combat inflationary pressure, and the structured warrant space, as you can see, started to slow down significantly, but still higher than the pre-pandemic levels. So during this time as well in 2021, if you notice that China was also still very harsh on its zero COVID policies, with Hong Kong index posting one of their worst annual performance in more than a decade. So the Hang Seng index actually fell more than 15% in 2022. But because of that, then you notice that the volume of structured warrants started to pick up as well in 2022 because some structured warrant issuers in Malaysia saw the opportunity of the fall in Hang Seng index and started to roll out Hong Kong listed underlying warrants in Malaysia for investors to gain exposure to this Hong Kong share performance on the back of a potential rebound, or for investors to ride on the bearish sentiment of the Hong Kong underlying. Which brings me to the following slide on the reasons why investors like yourself probably are thinking to trade structured warrants. So there are main 6 reasons to trade structured warrants. To begin, structured warrants is a leveraged financial instrument that gets its value from the value of the underlying security. So it tracks the underlying security, be it ETF, underlying stocks, or even index as well. So because it's leveraged with the same capital outlay, a structured warrants allows you to increase the exposure to the underlying security and offer a higher percentage return, of course, resulting in magnifying the potential returns. But at the same time, do note that it also increases higher percentage losses if the things do not go as planned. So secondly, it has a lower capital outlay because warrants are typically priced below 1 ringgit. And speaking of no margin call, back to my first reason is the contrast between, let's say, warrants and your other forms of leverage instrument is that the risk is only restricted to your initial payment. So, for example, if you are investing into futures, there's always a margin call if it goes down a certain initial margin level. But for warrants, there's no margin call, and your exposure is actually limited to only the cost of purchasing the warrants if things do not pan out the way that you envision it to be. So of course, the third reasons also why some of the reason people trade structured warrants is because they might be able to, investors like yourself are able to profit from either direction. So in other words, some investors take the advantage of rising or falling market with a call or put warrants. So in Malaysia, if you were to carry out short selling, the position must close off within the same trading day. So investors who has a bearish view, for example, over a certain underlying, put warrants then becomes their best friends because it provides an investor like yourself to gain when the underlying falls, and investors do not have to close off they are positioned within the same day, as they could hold on to the put warrants up until maturity date of the warrants. So then the fourth one is, as I mentioned in the first, similarly to the first benefit, is because your potential losses are limited to your initial capital. So in the sense that if you chose to use 1,000 ringgit to buy your warrants, worst case, if until expiry date and nothing happens, you would understand and you would know and be prepared to actually know that your maximum loss is that 1,000 that you fork out to buy your warrants. Okay, on the fifth one, because structured warrants are also listed on Bursa exchange, so this provides the ease and transparency for investors to buy and sell their warrants as long as it's during the market trading hours. So as a market maker, issuers of the market makers continuously provide liquidity through the bid and ask quotes throughout the day. So provides the comfort to investors, which allow investors to enter or even exit their position from the structured warrants, regardless of whether the warrants are having a market demand or supply. And lastly, structured warrants allow investors to release most of its capital with exposure to the underlying and replace it with structured warrants to maintain the exposure to that same underlying. So it allows investors to utilize the released capital to seek for opportunity elsewhere in the market. And also, based on the lower capital outlay as well, your structured warrants has a lower stamp duty as compared to you trading the shares itself. So for structured warrants, the maximum stamp duty is capped at 0.1% at a maximum of 200 ringgit. So to reiterate what I've just shared on why are the reasons some investors choose to trade warrants, or if you're thinking to trade structured warrants, is because number one, basically is you do not have margin call, and the essence of it is it's a lower capital outlay and you can get exposure to the underlying performance, whereas whether it's index, ETF, or even shares. So investors have to pay only a fraction of the price to gain the same total exposure of the underlying assets. So then comes to my next slide on what exactly are structured warrants. So if you're new to here, I'm really happy to share with you what structured warrants are, but if you have been to any of the structured warrants webinar before, this could be a refresher for you on what is structured warrants. So a structured warrant, basically what it does, structured warrant itself, it's a leveraged financial instruments which derives its value from the value of the underlying security. So it tracks the performance of the underlying security and it provides exposure to the underlying security for a fraction of the underlying security price. At the same time, as I mentioned earlier on, this could be over shares, index, or even ETFs. The most popular structured warrants right now in the market in Malaysia are typically over underlying shares, so individual shares. But as for index as well, it has become significantly popular as well when it comes to the Hang Seng Index. Lately, also, there are a few that are listed over ETFs. For example, Hong Kong listed ETFs like your A50 China ETF. So basically, these products are listed on Bursa Exchange, and as I mentioned, it costs as a fraction of the underlying price, just that the difference is for structured warrants, it has a maturity date. So it's not like a shares, but it works like a share. For example, shares do not have a maturity date, but structured warrants have a maturity date. So in order to paint a picture to make it more relevant to reality, instead of being very technical about what the instrument is, let's take a look at the next slide. For example, to give you an example on Pertama Digital. Let's say you are looking at one of the stock listed on Bursa Malaysia. Over here, my example is Pertama Digital. So Pertama Digital is actually a Malaysian-based company which provides digital product that offers government agency digitalization services, and the company's products and services include eJamin, My SMS, MyPay, So what structured warrants give you is it gives you another investment tool or another option to get exposure over Pertama. So you can see from this graph, instead of trading around 2 ringgit plus for Pertama, you can gain exposure to Pertama's share price with just around 14 cents to 15 cents per unit. So there are two types of structured warrants available in the market. We have call and put warrants. So call warrant value goes up when the underlying share goes up. They both move in tandem with each other. So call warrant essentially gives the holder of the warrant the right to buy the share at the exercise price, or also known as the strike price. So call warrants is more suitable for investor who has a bullish view of the underlying security that they are looking at. So be it upside view or you're thinking that there might be a rebound, so call warrant would be a suitable investment for you. Whereas for put warrant, the value goes up when your underlying share price goes down. They both move inversely with each other. So put warrant gives the holder the right to sell the share at the exercise price. So for put warrant, it's more suitable for investor who has a bearish view over the underlying security. Both put and call are tradable in the market on a daily basis as long as it's not expired yet. So for majority of the warrants listed on Bursa Malaysia are call warrants. But what happens if you hold it until maturity and you've forgotten that you actually bought a call or put warrant? So to paint a better view on this, I will share with you on the next slide on the payoff diagram on how it looks like if, for example, you've forgotten that you have bought a call warrant and you hold it until maturity. So for these two products, structured warrants, call warrant and put warrants, they are meant for trading and not meant to buy and hold it until maturity. But here is the example of the potential on how it works. So I have three scenarios here, which is the green, yellow, and red scenario. The green section is basically the potential gains, whereas the red section is the potential losses. As you can see, when it comes to call warrant, the potential gains are unlimited, as long as your underlying security continues to perform upwards. So for example, if you bought it when you have a view that your underlying security will rebound, the potential gains could be unlimited, whereas your losses are capped at your initial capital outlay. So in structured warrants term, we have these three scenarios where it's commonly used, and you can commonly hear about these terms when it comes to structured warrants, which is in the money, at the money, and out of the money. So if expiry, assuming that you hold it until expiry, the call warrant is in the money, that is where you will enjoy your profits. If it's out of the money, you practically lose your initial investment amount. So in reality, at the money warrant is not widely observed. Usually it's either in the money or out of the money. However, if it does fall at the money, you get the call warrant price back. Thus, you're only losing the transaction cost that you've incurred, which is your brokerage and stamp duty. So this is what happens when you hold the warrants until maturity. However, the warrants are tradable in the market every day. So up until 2 market days before it's expired. So as I mentioned before, structured warrants is a trading tool. So it may not be advisable to hold it until maturity unless you are very confident that you'll be able to break even. So for example, if you have bought into particular warrants and the warrants has already gained in terms of percentage or in terms of cents, you may sell it directly to the market and take profit. So on the other hand, for the put warrant, it's the other way around. So the green section is the potential gains, whereas the red section is the potential losses. So as you can see, when it comes to put warrant, the potential gains happens when your underlying security falls. So on the other hand, if your underlying security increases, your potential losses are also capped at your initial investment amount. So in structured warrants term, as mentioned just now, in the money, at the money, and out of the money. So if you can see, it's the same way of reading it, in the money, at the money, or out of the money. Just that for put warrants, it's the other way around. So for put warrants, you are assuming that you will gain if, for example, your share price, your share price is way below your share price is below your strike price, as compared to your call warrant, where you will gain if your share price is above your strike price. So this is what happens again when you hold it until maturity. So again, I would like to stress that this is a trading tool. So it shouldn't, or basically it's not advisable to hold it until maturity, because your warrants can become out of the money when it's, for example, first listed. But as your, for example, if it's a call warrant, as your underlying keeps going up, it may be out of the money in the beginning, but within the tenure of your warrants, it can become in the money. And that's where you will gain and you can sell it in the market immediately. So another thing why I mentioned that warrants is not a trading, it's not to hold until maturity and it's a trading tool, is because of the time value of a warrant, where it decreases over time as your warrant approaches the maturity. So because of time value, as you can see, for out of the money, your value of your warrant is basically coming all from time value. Whereas at the money, it's coming from time value, but it has a zero intrinsic value. Whereas for your in the money, it's actually coming from your intrinsic and your time value. So an out of the money warrant tends to be cheaper than an in the money warrant, because in this example, assuming of course all parameters remains unchanged, is because out of the money warrant only has a time value, whereas your in the money warrant has an intrinsic plus a time value. So from investors' point of view, it is very important to know if the warrant you are thinking to buy suits your risk appetite. So whether you are thinking to buy out the money, at the money, or in the money warrant at the beginning. So you may buy out the money warrant because you may think it's cheaper, but as your underlying moves, you will realize that your warrant may take a longer time to move as compared to in the money warrants. But then again, your out of the money warrant can always become in the money warrant throughout your tenure of your structured warrants. So to paint a picture here, out of the money, as mentioned just now, for call warrant, your share price is lower than your exercise price. For put warrant, your share price is more than your exercise price. So when it comes to out of the money warrant, you tend to see a lower warrant price as compared to in the money warrant. And as such, you will have a higher risk and higher gearing when it comes to out of the money warrant. So different moneyness of the warrant implies different risk tolerance. So again, assuming that all your parameters are the same, typically your out of the money warrant has the highest risk among all. So meaning larger potential gains, but also to note that at the same time, it's also a larger losses. So at the end of the day, always come back to your own risk appetite. So because of that, we need to know an overview on structured warrants, and I would like to digest a few components of what makes up and how it impacts, or how does these factors impact your structured warrant price from an issue. So as you can see, there are 6 components over here, or rather 6 factors. I would say you have your interest rates, your tenor, your dividend, your share price, volatility, and exercise price. So assuming all your other factors remain unchanged. So if I'm talking about interest rates, I will assume all my tenor, dividend, share price, volatility, and exercise price remain unchanged. Typically, when your interest rates increase, a call warrant price will be higher, whereas a put warrant price would be lower. Secondly, the longer the expiry date, both call and put warrant tend to fetch a higher price, as investors are given a longer time to enjoy the time value. And thirdly, the dividend. So expected dividends are taken into account in the pricing of the warrants. So if dividends were to increase, typically the value of a call warrant will drop, whereas a put warrant will rise. Overall, interest rates, tenor, and dividend have very minor impact on the warrants as compared to the share price movement and the volatility of the underlying share. So as the share price increases, assuming again all factors remain unchanged, the call warrant value will go up, whereas the put warrant will fall. So this can result in the warrants moving from one moneyness to another due to the movement in the share price. For example, you can go from out of the money to in the money. So volatility at the same time impacts the call warrant and put warrants the same way. So the higher the volatility, the value of your call and your put will go up as well. So as I mentioned just now, the share price movements and volatility directly impact the warrant's intrinsic value and time value respectively. If it's too much to digest at the moment, you may visit some of the issuers' warrants website to know more about the factors of structured warrants, which is explained in the website as well. For if you want to know it, for it to be more detailed. So issuers also constantly provides educational session or content. For example, right now, you guys are listening to me on their website or social media channels to keep investors informed about structured warrants. So speaking of issuers, this, for what I've shared just now on what are structured warrants and from your perspective of what is structured warrants, now we like to think about from an issuer's perspective. So for example, from Maybank, as an issuer of structured warrants means Maybank actually issued these warrants to be listed in the market for investors like yourself to trade. Let's take a look on the number of criteria that issuer takes into account when issuing structured warrants. So one of the criteria is the underlying has to be listed on the main market of Bursa Malaysia. So this is for Malaysia underlying, but if we are talking about foreign underlying, then that will be a different case. Because most of the underlying right now and majority underlying are listed over Malaysian underlying and Malaysian shares. So that's why I'm covering mostly on Malaysian today. Secondly, the market maker, you must appoint one market maker if you would like to issue the warrants. So generally, the issuer of the structured warrants is the market maker of that particular structured warrants. So for example, if you're looking at the structured warrants that is issued by Maybank, then Maybank is the market maker for the structured warrants, meaning to say that they are obligated to place the bid and ask quotes in the market for investors like yourself to buy and sell these products. Thirdly, the tenor of your warrants will have to be equal to 6 months or less than 5 years. And lastly, the underlying will need to have at least 500 million market cap for the past 3 months or 3 billion for an IPO. These are for Malaysian listed shares. And if you're talking about foreign listed shares, it will be 3 billion, RM 3 billion for the past 3 months and RM 5 billion for IPO. So previously, before 19 January this year, the criteria for market cap for underlying was actually at 1 billion. So right now issuers can issue warrants over underlying shares that has a 500 million market cap. So what does it mean by market maker? As I mentioned just now, if Maybank is the issuer of a particular structured warrants, they are also a market maker of that warrants. Basically, the 3 important roles of a good market maker is to, number 1, promote transparency, number 2, promote fairness-centric, and number 3, to provide liquidity for these products. So Warrant Matrix is one of the tools that most issuers provide for free. This is where issuers promote transparency because a live matrix shows and investors what are the price that issuers are queuing in the market to buy and to sell these particular warrants. Secondly, it's also to promote fairness-centric because the live matrix as well and market maker, when they price it on the market as well, is actually priced at a fair price. And thirdly, is to provide liquidity for investors to buy and sell. So sometimes structured warrants may not be traded every day, but not to worry. The market maker will be there to still place the bid and ask volume and quotes for investors that have already bought the warrants and are afraid that nobody will buy back. Issuers will be there to buy back as long as your warrants has a value. So for example, here, took a screenshot on 14 March. If you're looking at Astro, if you key in Astro, all the warrants that are listed over Astro will be listed below the Astro underlying shares. So now that we've talked about the more dry and technical part, I think this is one of the most exciting part after knowing what structured warrants are. And if you're thinking to try it out, this is basically a general journey on starting your structured warrant investments. So we go through this 5-step journey, which is ideation, direction, selection, observation, and accumulation. So to begin, it comes with ideation. So you have to form a trading idea for your next upcoming trades. Your ideas may come from research reports, news flow, trustable issuers Telegram channel. So ensure that it's trustable. Do read their description to see whether the Telegram is from a trustable issuer. From there, then you need to have a view or a prospect of the share performance, either bullish or bearish view. So this is where we talk about the direction, which is very, very important, because if you're having a bullish view, then the direction would be for you to go into a call warrant. But if you're thinking that you are going to have a bearish view, then it's best to look at a put warrant instead. So after that, you then followed by the warrant specification that suits your risk appetite, and observe it once has been traded. So observation meaning you can track the warrant prices closely with a tool called the Live Matrix. So later, I think if we have some time after the session, I can go through on the Live Matrix briefly, because the Live Matrix will be covered in probably the next session when it comes to the intermediate level. So that would be the 4th step. And the lastly is to exit when it hits your target price and have a stop loss in mind. So setting this as a base, you can then create your own trading mindset or ritual, I would say, as investment and trading can be a very, very personal thing, I understand. So it may work for some, but it may not work for some. So that's why this is just a general warrants journey that I'm willing to share with all of you here right now. So the best is to try out and find what works for you. So of course, I'm glad that everyone here, yourself, is tuning in this late. I think now is about 9 o'clock and you're still tuning into this to listen to structured warrants. So I will give you a little teaser on my own ritual on how I choose the structured warrant based on my perspective. So I like to call it the ATF guide. So from my point of view, the ATF guide, I go through what I call the action, thoughts, and feelings. So in some ways, I like to joke about it, saying it also stands for Amy Thinks Fast, ATF, right? So jokes aside, how I will usually think of trading which warrants is firstly, have a clear set of expectations and what steps I need to take to meet it. For example, I may want an additional leverage over a certain underlying with lower capital, and I do not intend to hold onto it for too long. So I'm not concerned about having shareholder rights on dividend, and I just want to take a quick profit. So then I will set aside the amount that I'm comfortable with. So for example, if I'm comfortable with only, be it 100 ringgit, 200 ringgit, or it can go as far as 1,000 ringgit, I have to have this in my mind of what is the amount that I am comfortable with. So then I will look at which warrants that have the potential to reach my target of, let's say, I target to reach a 25% gain in the next few weeks. So I'll look through research reports, read through any market news, and decide if I'm comfortable with the volatility of the particular underlying share that I'm looking at. Say, for example, banking stocks. Typically, the stocks does not move as drastic as, let's say, some tech-related stocks like Pertama. So perhaps I'm okay with the spikes in prices and may put a little portion into the warrants. But I also have to be prepared that there might be a potential loss because the higher the volatility, the potential losses might be higher as well, despite it having a higher potential gains. But let's say if it hits 8%, I will take a profit regardless how the warrants are going to perform after. So likewise, I also set a stop loss. For example, if it falls by 20% or it does not move after a few weeks, I would then cut loss and look for other opportunity instead. because I'm already prepared to lose this 100 ringgit that I set aside for this particular trade. So there are some instances also where, for example, I will hold on for more than a month. So let's say if I don't want to hold it for a few weeks, but more than a month. So the reason that some of the warrants why I tend to look at and hold it for a month, more than a month, is because ahead of earnings season. So if I know that March is going to be a very good or there's going to be a lot of earnings seasons, and hopefully I could tap onto the movements during just that particular period. In this case, I then tend to look at the longer dated warrants. So I will ensure that the warrants that I choose would have a longer expiry date so I can still capture the earnings season's volatility when it happens. So of course, they say you do not put all your eggs in one basket. So I would usually take a portion of the investment amount of warrants, as the objective is to gain the extra leverage than otherwise buying the shares. So if I only have, let's say, 100 ringgit or 200 ringgit to spare on, perhaps I might only put into warrants 100 ringgit and another 100 ringgit into the underlying shares. So this is also setting aside a small amount and reprioritizing my wants or my needs when it comes to investment. So the next slide also, for example, where I say like setting aside and reprioritizing. So this is what I would usually do. So for example, spending on a cold brew a day. So I would like to use this cold brew analogy. So spending on a cold brew a day may seem like a very, very small amount. For example, 13 ringgit for me. Because usually, let's say if I drink coffee, I will spend on a cold brew instead of a normal latte. So, but if you accumulate and then look at a monthly basis, you would have spent, I would have spent, assuming 31 days, I would have spent 400 ringgit just on coffee for the month. So is this a necessity or a want? So these are the things that I will ask myself. So this boils down to my personal preference. So in my case, I would think that it's just a want for me and not a necessity. So I wouldn't mind omitting half of the amount that I spend on the coffee, say 200 ringgit, and place it in a warrant where I believe may have some sort of gaining or potential opportunity in the short term. So say, for example, 200 ringgit I set aside. I could have bought 5,000 units of UEM S-C82, which is a warrant over UEM Sunrise. So the call warrant was priced around 4 cents during that day. And in a day, it gained about 50 ringgit from this trade. So with the 50 ringgit, I can then decide whether to treat myself a coffee or save it up and look for other opportunities in the warrants market. So if, say, worst case, the warrant did not perform the way I anticipated to be, meaning it fell and it falls to zero, the worst case is I would have lost 200 ringgit, which I would have been prepared to lose, as on a normal basis, this 200 ringgit would have been already spent on my cold brew on a monthly basis. So that's why I'll say that warrants gives me an opportunity to increase gains on some returns with a lower capital, of which I would have then otherwise spent it on a cold brew, which is an outright expense with no return. So at the same time, with the lower capital, I can also look to gain opportunity in tapping onto other markets such as Hong Kong market, in which is generally a more volatile market as compared to Malaysia. So, for example, linking it and connecting the dots is very important to me as well. So, besides Malaysia market, there is also Hong Kong markets where some issuers issue warrants over, but it's listed in Malaysia. So you can actually trade these warrants in Malaysia itself. So let's say Hong Kong market isn't really my forte, or I am not as well aware as compared to Malaysia market. Because, for example, for Malaysia market, we can get research reports from a couple of our local research houses. But when it comes to foreign houses, then it might be more difficult to get some kind of research reports. So So the question is, I still do want to gain exposure because I still do know some of the Hong Kong stocks, but let's say I do not want to take the risk in investing all of it in that market. I would then split into, let's say, I would say a 70-30 ratio. For example, as the example just now, I had 200 ringgit as an available investment amount. So we know that Sime Darby is the main distributor of the BYD brand in Malaysia, which I have seen a couple of BYD cars on the road lately. So at the same time, let's say I would like to tap onto both markets, Malaysia market and also the Hong Kong market. So knowing that BYD is also exposed to other global markets, the volatility of the underlying share is much larger than Sime Darby. So I would then look at BYD core warrant listed in Malaysia, as well as Sime Darby's core warrant to gain exposure to both markets. So killing two birds with one stone. However, given that, of course, BYD is much volatile, the prices, the probability of the core warrant to hit my target might be faster because it might go up faster than Sime Darby, but the probability of me losing a lot is also the same. So I'll have to be prepared to take profit or cut loss as and when. So that's the beauty of warrants available on Bursa Malaysia these days. Gives us the opportunity to not just gain exposure to Malaysia, but also gain exposure to Hong Kong and linking it up. Like for this example, we know that Sime Darby is going to be the main distributor of BYD cars. We can gain exposure by buying Sime Darby core warrant. At the same time, also gain exposure to BYD by buying BYD core warrants in Malaysia. So there's a lot of linkage that for example, we also have, if you know Proton, right? And DRB owns Proton as well. And you know that the car X50, Proton X50, X70, it's all Geely Automobile as well. So we also have Geely available to trade in Malaysian market, Geely core warrant, and at the same time also DRB core warrant. So similarly to this, you can gain exposure to both markets with, let's say, the available investment amount that you have. So I would say if you're someone like me who enjoys the volatility, this could be another avenue to gain exposure to the global markets. Instead of opening a foreign trading account, all you need to do is just open a local Malaysian trading account to gain exposure to this. So there's no need to pay foreign brokerage fees. All the brokerage fees are still tagged to your local trading account brokerage fees, including the stamp duty, which is much lower than buying the underlying shares. So there's a lot of other Hong Kong warrants also. From the top of my head, I can think of Alibaba as well. Alibaba warrants are also listed on Bursa Malaysia. So you can check out the list of Malaysia underlying or even Hong Kong underlying for various sources such as public websites or even the issuer's Telegram channel. So you can see here readily available tools that's available on you can look at Maybank's website, you can look at Bursa's website. There's also, aside from getting to know the list of warrants listed, you can also look at your live matrix and also where you can get join a Telegram channel and to read daily warrants watch or warrants highlights at your own pace and getting informed instantly on the go via Telegram channels. So I think I've spent quite a fair bit explaining and showing from my perspective of warrants. And I believe I've spoken enough for tonight, and I'm more than happy to answer some of the questions before we close off this session tonight. Because I think the time right now is about 9:20 and we have about maybe 20 to 30 minutes for me to answer any questions, or if you guys would like to look at a live matrix example, I can always share the screen on one of the issuers, for example, Maybank's website, to show you how to read the live matrix. But then again, because this is just a beginner session and sharing from my perspective of warrants, so for the live matrix will be also covered in the next session, the next few sessions that Bursa will be conducted in the following few months. So yeah, I think that's it from my end. So perhaps I will pass back the mic to Shane.
Sure. Thank you so much, Amy, for such a very informative session. I have learned a lot about structured warrants today, learning about the factors that can affect the price of the structured warrants. So if you have any questions to ask our speaker today, Amy, you may write them in the Q&A box. Don't write them in the chat box so I may overlook your message. So write them in the Q&A box so we can easily manage your question. The first question is asked by Hanizam. Is structured warrant similar like option in the US market?
Yes. So for warrants here in Malaysia, is a type of option. So warrant is a type of option. So all the pricing is actually following the option model, where we call the Black-Scholes model. So yes, in Malaysia, we commonly call this the options. But then the difference is that in Malaysia, you can only buy the warrants. So you can't short it. So only the market makers are the ones that are selling the warrants, basically.
So are there any fundamental difference between these two?
No, basically the pricing is all the same using Black-Scholes model. So both is using Black-Scholes model. Yeah.
All right.
I think there are some in the chat box, is it?
Yeah. The next question is by Andrew Lau. For market makers, if the ticker is a bad company, do they still buy the warrants to carry out their market maker obligations?
If the ticker is ticker is a bad company, as in? Okay, so before a market maker before an issuer actually issue a warrant, they would have looked through some of the underlying research and the underlying potential of the shares itself. So of course, I think when it's already listed, then the market maker has the obligation to always price it at a fair price. So the only time where the market maker can't place the bid and ask quotes is sometimes when it hits a limit up or a limit down when the underlying share, or when what happens is if let's say the share goes delisted, so then your underlying warrants will also go delisted. So I'm not sure whether they will still buy the warrants. I'm not sure whether I answered that question correctly. Yeah. So I think generally before an issuer actually issue a warrant, they have to go through a few steps on why they are going to issue the warrants, and also is being regulated by Bursa and also SC. So it has to get approval once submitted to them as well. And also there are a few rules where your market cap has to be at least 500 million for the past 3 months. Or when it comes to IPO, then it has to be RM3 billion. So these are all the few factors and the criteria that issuers decide before issuing a structured warrants. So generally, it's issued over a relatively good fundamental underlying.
All right.
Yeah.
If you have any more questions, please write them in the Q&A box, not the chat box. Okay. So could you tell us about, when it comes to trading warrant, what are the brokerage fees that involve?
The brokerage fee will be the same brokerage fee as the shares.
How about stamp duty?
Yeah, so stamp duty will be much lower. Stamp duty is 0.1%, capped at 200 ringgit. For
Much
brokerage
lower
fees,
than the stocks.
Correct. So stocks is stamp duty is 0.15%, whereas for warrants is 0.1%.
And a clearing fee remain the same, right?
Yes.
0.03%.
Yeah. So everything remains the same. For brokerage, is the same as whichever brokerage account you have. But for the only difference is the stamp duty difference, which warrants has a much lower stamp duty.
Okay.
Yeah.
The next question is, why has there been no Tesla warrants or any big US companies warrants?
Oh, I like this question a lot, actually. So there's a lot of question regarding these US warrants as well. So of course, you can always drop us. For example, you can always drop an issuer. For example, for Maybank, you can always drop at on the website when you want to look at if you have any feedback on warrants that we should issue. So at the moment, we do not. I think no issuer has any underlying US stock warrants at the moment. So of course, if any issuer do come out, for example, like Maybank, make sure to subscribe to the Telegram channel to get informed on when the issuance of, for example, US warrants will be. So yeah.
You mean it is possible for
It's
you to
possible.
issue?
Yes, it's possible. So as I mentioned just now, I think I can, am I still sharing my slides?
Yes, you
Okay.
still are.
It's possible to issue over Tesla because as long as you can see, let me show you, as long as your underlying here, you can see here for foreign outside of Malaysia, as long as it is more than 3 billion market cap, then the issuer can issue the warrants over this.
How
So
do you
it is
make it
possible.
when the US market is closed?
Yeah. So currently there is no issuer that has issued US stock warrants yet. So I think once there is a US stock warrants available in the market, there will be issuers that will be conducting educational session on how, from a market maker's perspective, how to track the prices, and also do stay tuned to some of the Telegram channels. For example, I think for example, Maybank, Trade with Maybank Telegram channel has a daily update on the market as well. So as long as you're in that channel, you will be informed once the potential of US listed warrants will be out there.
Interesting. Yeah, I was just wondering how the warrant price move when the US market is closed. Maybe you could be tracking the futures, single stock futures. We'll see.
So
Alright,
so that's why it's good to join the channel to see whether there will be a US warrants that will be available anytime.
Yeah, hopefully it won't gap out and gap down every single day. The next question is by Shafiq.
Okay.
How do we determine whether the warrant is priced correctly for the exercise price it offers?
Exercise price. Okay. So basically, you just refer to the live matrix on the warrant website. That would be the warrant price, because all the warrant is price based on the Black-Scholes model, and it will be shown in the live matrix as well. So just make sure you look at the live matrix. If something looks fishy, then there's always contact us for you to contact us, and our sales people will be able to assist.
All right, thanks, Amy. So the next question is, what are the benefits of using Maybank Investment Bank's warrants compared with RHB Investment Bank when it comes to trading warrants?
Oh wow, this question, I like how they ask compared to RHB Investment Bank, because we have 7 issuers out there, but I decide to compare to RHB. Okay, so there are, I wouldn't say whether there is comparing whether what are the benefits. It's more of which warrants listed in the market and which specs that suits your risk appetite. Because different issuers would have issued warrants over different, let's say, tenor, exercise price, exercise ratio, which would affect your warrant price. For example, if, say, a particular issuer issued a warrant that is far out of the money, meaning to say the call warrant exercise price is not trading close to what the current market levels are, then you may see that if you buy that particular warrant, even if the share goes up a lot, your warrant price might not move. So it's very important to, so I wouldn't say whether to compare whether what's the benefit between those two. It's more of which one you think that suits your view and your risk appetite the most. And generally for Maybank Investment Bank, if you notice, most of the warrants that are listed on the exchange by Maybank Investment Bank, they have an exercise price that is trading quite close to current market levels. So typically, it's quite responsive to the underlying share. Yeah.
All right. Thanks for the clarification, Amy.
Yeah.
So just look for the product spec that suit you.
Yeah.
Okay. The next question is, you have mentioned that the maximum loss is initial capital. Please confirm with me that if you put the stop loss, does it mean that we still can save some of the initial capital?
Yeah. So the maximum loss meaning to say, if, for example, if you hold the warrants until expire, and if the warrants is out of the money, basically what you have lost is the amount that you paid to buy the warrants initially. But at the same time, before it expires, you can always sell the warrants in the market as long as the warrant still has value. So the time when the warrant doesn't have value is if the warrant is trading very far out of the money during the tenure of the warrant. So before it reached that level, you can actually sell back to the market maker. So as I mentioned, it's very important to look at the live matrix to time your entry and exit point. So basically, you look at the live matrix, you can kind of see and estimate when or where will the share go down before your warrant actually reach that particular level, which I can show maybe later if we have time on just on one of the on the website on how the live matrix looks like.
Sure.
Yeah.
The next question is by Chin.
Yeah.
I was given bonus issue of warrants from this company, Remsol. What is your advice of this bonus issue of warrants? I suppose these are company warrants.
Yeah. Okay, Chin, what we're talking here is structured warrants. So for the company warrants, we do not cover here. So it's best to check with your brokers on this when it comes to company warrants. I'm not in a position to advise on that. Yeah.
Maybe Amy, you can tell us about what is the difference between company warrants and structured warrants.
Oh, okay. So for company warrants, it's typically when you exercise the company warrants, you physically get the share. And it's typically for a very long term, for example, 5 years or so. But for structured warrants, it's a very short term, less than a year mostly, and you do not get the chance to convert to buying the share. So it's all cash settled. So whether it's out the money or in the money, if it's in the money and what you will get in return when it expires is a money that will be transferred to your bank account. But as I mentioned before, for structured warrants, it's more of a trading instrument, giving investors the opportunity to gain leverage exposure over the underlying share. Whereas company warrants is issued by the company itself and investors can convert into the underlying share.
Yep. So how to distinguish between the call warrant and company warrant is that the call warrant, the warrant ticker symbol is start with C. Yep. And the company warrant, the ticker symbol start with W. Okay, so if you have a warrant that is start with W, it means these are issued by the underlying company themselves, and you can convert it to a mother share, right? So it depends on, so what you're going to do with the warrant of Remsol, I think it depends on your view about a company, whether you're bullish or you're bearish, and you decide what you're going to do. So this company warrants comes with a leverage element that can give you a leverage exposure to the company share price performance. All right, and it's issued by the company, whereby structured warrants are issued by third-party issuer,
yes.
Okay, such as Maybank or RHB Bank, for the matter of helping you to achieve your trading objective. So the next question is by Andrew. How do we identify the warrants that are issued under the different issuer, whether it's Maybank or other banks?
Oh, okay. Thanks, Andrew, for your question. So how would you know is you can always visit an issuer website and it will show you all the warrants issued in the market right now. For example, Maybank's warrants website, it does not only show Maybank warrants, it also shows the warrants that are available in the market. So it shows all the warrants that are issued in the Bursa Malaysia.
Since we're at it, right, Amy, why don't you show us the website?
Let me
so we can further clarify this question.
Just wait for a moment.
Is it all issuers will publish the warrants in the market, or there are some issuers just publish their own warrants?
Oh, that one I think we have to check at individual issuers' website to determine. But from what I know is for Maybank website, it shows all the issuers. We are very fair.
Good
okay, let me share. Yeah. So from here, can you see my screen, Shane?
Yes, I can.
Yeah. Okay, let me just, so you click on warrant tools and warrant search. you can click on here and click all issuers right here. So right now you can see 1, 2, 3, 4, 5, 6, 7 issuers, and you click submit. And you can see, just take some time to load. You can see all the issuers here that are listed. So it's all the warrants that are currently in the market right now. So hopefully that answers the question.
So
Yeah.
that is on the third column.
Yes.
Right. So this is,
so it's on here.
So this is the matrix that you can refer to. And that's where you can evaluate whether the product spec fits into your requirement or not.
Yes.
Are they too short, or is it too long? Or how is the gearing like? What is the liquidity like?
Yeah.
So how is the spread like? So you can evaluate all this information from the matrix.
From here.
Let me do the next question.
Yeah.
How do we join Maybank Telegram group?
You can just join trade. You can search trade with Maybank on Telegram and just click join. I think one of my colleagues will actually send the link there.
Yep.
Yep.
That's great. The next question is by Mervin. Normally, is it very hard to buy or sell because some counters there's no people queue for warrants?
Okay. People queue. Okay. Basically, for structured warrant, as long as it's during the market making hours, which is 9 a.m. to 4:45 p.m., Maybank, for example, I only can speak on behalf of Maybank. We will place the buy and sell volume and the quotes in the market. So there will always be there, unless, as I mentioned, unless if the underlying share hits limit up or limit down, or instances where your warrant value is 0, then the market maker cannot place the bid volume and the bid quote on it. So that's why it's very important to take note of your warrants when it's very, very far out of the money, to make sure that you sell it before it goes below 0. So you can see this and estimate it based on the warrant matrix as well.
All right.
Yeah.
Let's do the next question. Is it important for us to identify whether the warrant is in the money or out of money before we purchase it? So this question is by Muhammad Faiz.
Okay. So this one, as I mentioned just now, I think during my slide, that it's important to know your risk appetite. So whether you are willing to, because out of the money warrants tends to take longer time to move compared to in the money warrants. So if you are someone who is less risky or can't take that much of a risk, I would say that perhaps you may want to look at in the money warrant. But at the same time, do note that in the money warrant, the value tends to be slightly higher compared to out of the money. On the other hand, also, for some investors, they prefer out of the money because they are very confident that the underlying will suddenly see a spike in the share price. So they don't mind buying into out of the money warrant now. And maybe in the next few weeks, when there's a sudden spike in the underlying share, then they can actually gain a higher percentage compared to in the money. So at the end of the day is to really identify your risk appetite and what your expected profit is before going into the warrants. So you can always compare it by using the warrants matrix tool and by keying in the particular underlying to see side by side which one you're more comfortable with.
Our money warrants less sensitive to the mother share price movement?
Yes. So it's less sensitive. So basically what it means by less sensitive is your underlying share will have to move much greater before you see a movement in your warrant price.
So in the money warrants, for the underlying share, they just move a bit, then the warrant price will move.
Yes.
This is what we mean by sensitivity.
Yeah.
So Mervyn would like to ask the follow-up question, which is how can we know the moneyness of the warrants?
Okay. So you still can see my screen, right, Shane?
Yes.
Yeah.
You can see it.
So if you guys can see on this last column here, I'm highlighting. Basically, OTM means out the money and ITM means in the money. So this is where you can check the moneyness of the warrants. Yeah. Hopefully that answers your question. But if you have any further question, can always contact us as well.
I have a question. How do you determine the percentage? 33%, 16%?
Oh, so it's based on your underlying share. So how far is it from your current underlying share price? Then that is how far in terms of percentage of in the money. So for example, let's say here we don't have the underlying share price, but let's say we take a rounded one. Let's say this is airport. Your exercise price is 8 ringgit and your underlying share price, what's the underlying share price?
17% less than the exercise price.
Correct. 70% less than your current share price. So your 9%
for call warrant.
Correct.
For put warrant, it would be 70%
the other way around. Yeah.
Okay. The next question is, I can see that some exercise prices are in Hong Kong dollar and Malaysian ringgit. So how about the currency exchange? Are there any charges?
Oh, okay. There is no charges for currency exchange because these are traded in Malaysian ringgit. The warrants are traded in Malaysian ringgit. The only time when there is a forex or FX change is if you hold until maturity, and if the warrant expire in the money, it will be converted with a FX rate. But as long as it hasn't expired, you can trade all this in Malaysian ringgit over here. So as I mentioned a lot of times, this is not meant to hold until expiry. So as long as your warrant starts to go up already, you can always just sell back in the market.
All right.
Okay.
Amy, why don't you, spend some time to share with us how do we read live metrics on your page?
Yep. Okay, Ken. But actually, is there one question on the calculation? How to do calculation?
Yes. Sure, we can do that. Can you show us the actual case on how to do calculation? If I hold the call warrant or put warrant until it expires, do all market makers use the same formula?
Yeah, so all market makers use the same formula. The only difference is the settlement price on how the market maker determines the settlement price. So settlement price, for example, some market makers use 5 days average closing price. Some market makers use 5 days volume weighted average price. So if you want to estimate how much in, let's say, actual case, if it expires, you can look on the website here as well, Warrant Tools, under Warrant Calculator. You can choose the warrant that you're looking at. For example, this Affin. So warrant calculator, click on Affin. Then you scroll down. So this where you would change the target price, what the underlying price would be. And then you can put here expected selling date. You can change it to the expiry date. Expiry is 31st July 2023. Then you'll be able to see how much value your warrant is. So that's how you estimate. So I think since we have a bit more time, we can go through the matrix. So for example, we look at live matrix here. If you go here, you can key in the underlying that you're looking at. Shane, you have any underlying you want me to look at? Astro.
Okay, yeah, fine. I was thinking about BYD.
Okay. But BYD, we only have, okay, so actually BYD is a good example to show between a put warrant and call warrant. So if you key in actually BYD, you can look at H here means it's a put warrant and C here means it's a call warrant. So currently you can see that the exercise price here is 178, and then the exercise price here is 288. So this is how you see, as long as for call warrant, as long as your underlying keep going up, your warrant price would actually gain over here. So what you can do is you can buy when it's here, and you can sell when it comes here. So this is how you see the warrant matrix. But if you see for a put warrant, it works the other way around. Put warrant will only gain if your underlying share goes down. So from 115, this is your warrant, it goes to 120. But your share has to go from 200 Hong Kong dollar down to 199 Hong Kong dollar. So that's how you read the live matrix. But at the same time, can show you, let's say we want to compare two Astro. Okay, so for example, just now I remember there was one question that asked whether it matters whether it's out of the money or in the money when I buy the structured warrants. So this is a very good example. For example, I have Astro C38 here and Astro C44 here with me. So as I mentioned just now, as long as your share price is more than this for call warrant, means it's in the money. But if your share price is below this, means it's out of the money. So as you can see from here, your warrant prices here, it says 0. It means the warrant has no more value. Another reason is because number one is trading so far out from the current level of Astro. For example, Astro, let's say 67.5 cents, but here is 98 cents. So it's trading very, very far. And at the same time, it's expiring in just a few more weeks. So your warrant value drops until 0. So this is where instances where market maker will not be able to buy back the warrants because you are unable to buy back something that has no value. Whereas here you can see 75, even though it's at 675 and it's still lower the exercise price. So right now, actually, this warrant is out of the money. But once it moves up and up, it can become in the money when it goes above 75 cents, and you realize that it will be more responsive. So currently, it might now take 3 movements for your warrant price to move. But as it keeps going up, you see it only takes 2 movements. And if it goes up to this price, it takes 1 movement, then it will already move by half a cent. So this is a difference about how you see when it comes from out of the money right now, and it can become in the money if it goes above 75 cents before 30th June 2023.
Okay, thanks, Amy, for showing us a live example of how do we refer to the live matrix. And just a question out of curiosity. How come the Astro C44 has a very irregular interval? Sometimes there are 3 ticks, sometimes there are 2 ticks, sometimes there's 1 tick. You see, from here, 69 cents to 69.5 cents is 2 ticks. Then suddenly when it move up, from 71 cents to 72 cents, it become 3 ticks.
Yeah, so this one, it depends on the formula because of the Black-Scholes model. So sometimes it can go up from 3 to 2, but that's why they say that it's always best to just refer to this matrix because this is populated automatically in the system. Yeah. So sometimes it's 3, sometimes it's 2, sometimes it's go back to 3. But as long as it moves closer and closer to, let's say, 75, right, then it will tend to be very, very responsive already.
All right, because as it gets closer to the exercise price.
Yeah, so it gets closer to exercise price.
All right, understand. The next question is by Shafiq. When trading warrants, are we trading with the issuer or with other investors?
Okay. When you're trading warrants, so basically if you're trading close or low on inventory warrants, then you may be trading with other investors. And what this happens is sometimes the warrant prices may be inflated And because the warrant prices might be driven by the market demand and supply. But as long as the warrants are not low on inventory or sold out, then the market maker will always be there to bid and offer for you. But not to worry about this, because you can see that from the live matrix, the market maker is very transparent. So even before you decide to buy these warrants, you can actually see at what price you're going to buy at what price you're thinking to sell at. So this is one of the amazing tools that issuers provide for investors to have the ease of buying into this product.
I see. So how do we know if a structured warrants is sold out?
Okay, so for on-the-go updates, for example, if it's Maybank, then it will be on the Telegram. But if you go onto the matrix or even warrant search, you can actually see those that are low on inventory based on the indicator. So if I go to warrant search, so to know whether it's low on inventory, you have to go to each issuer's website, because each issuer wouldn't know the other issuer's inventory, whether it's sold out. So if you're on Maybank website, then you will only know whether there's any Maybank warrants that are low on inventory. So you have to look out for this indicator here, which says low on inventory, but it will always be updated on the Telegram channel. So at the moment, the only one that is low on inventory, if you followed our Telegram, you would know that it's MyEG. So MyEG has been low on inventory for quite some time. You can see here, MyEG-C3M says that it's low on inventory. So when it comes to low on inventory warrants, we tend to stay out of this kind of warrants, because the prices may not be accurate, or it might be trading at a more inflated prices.
Yeah. All right. So you must remember from whom did you buy the warrants. Then you check with the issuer website to know whether this warrant is fully sold out or not, whether they still have stocks in their inventory. So important to follow up with them, join the Telegram as well. So if you get the first-hand information about the status of the warrants that they issue. The next question is by this gentleman, Sunta Ralingam. Can we use the option calculator instead of a warrant calculator?
Oh, I think that was answered by one of our colleagues here. So it's advisable not to use it. Advisable to, because structured warrants have a lot of other unique features, and there is also a market maker for structured warrants, for example, the issuer itself. So these features actually affects the pricing and the risk of structured warrants, given that, we have gearing, sensitivity, and you can price, you have factors like time decay, volatility, and interest rates. So I would say that it's best to just use a simple structured warrants, a Black-Scholes options model, or you can use our warrants tool, the warrant calculator, which has incorporated the similar calculation that we use for our system to price the fair price of the structured warrants. So the tools are all available for you on the website itself using the warrant calculator. Yeah.
Okay, so there are differences between how options in US are priced and how warrants in Malaysia are priced.
Yeah.
Okay. Are there no market makers in the US that market make the options?
I'm not familiar.
Not very familiar.
Maybe Shane, yeah. Maybe
I
Shane
think it should be the open market.
I think it's open market because the investors itself can sell. Yes,
you can write options.
They can write the options. Yeah. But for here, the market maker are the ones that are writing the option, that writing the warrants.
So if you are trading a warrant that the issuer still has stocks, then you are trading with the issuer most of the times, right?
Yeah.
Unless when the inventory has run out.
Yes.
Then you probably have to trade with the other traders in the market that may not really reflect the true value of the structural warrant. So this is something that you need to remember. Okay. Yeah. So when you buy warrant, you must know whom you buy from. Okay. So you can find the seller. Okay. If there's any inquiry. Right, and today, of course, one of our renowned issuer here, Maybank, is on the line with us to teach us about structural warrants. So Mervin has a follow-up question.
Mm.
Let me read the question and interpret that. Does it mean that when we buy or sell warrants, we actually trade with the banks, not like the shares when we trade with the public market? Yeah.
I mean, you basically still buy and sell in the public market. Just that the warrant prices, the market maker is one of the bidders, and to bid the price, to put the bid and ask volume and price for you. So you actually still buy in the public market, just that you can refer to matrix where you see that basically the market maker is one of the buyer and one of the seller of this product. So technically it's not buying and selling to the bank in general, it's still trading in the public market. Just that you're trading based on the live matrix that the issuer shows on the website.
Yes, you still trade in the public market, just that the big counterparty is the issuer that offers you the stocks or buy from you the stocks if you want to sell. All right. So the issuer here and the market maker here is to make sure that the price of the warrant is fair. So they follow the Black-Scholes model to make sure that the price is fair so that you won't buy it at the rip-off price. Okay. Yeah. So that's the function of the market maker.
Yeah.
Okay. Looks like we have no more questions. So Amy, do you have any last piece of advice to all of us here today?
I think the last piece of advice is do have your stop loss and your take profit levels set up before you decide to trade into warrants. Also, because it's a trading instrument, so advisable not to hold until maturity. And if you're new, you may look at those longer dated warrants. So I think it's very important to not be greedy when it comes to structured warrants, and just to know that structured warrants has an expiry date. So it's not like your shares, and it's mainly for you to take advantage of short-term movement of the underlying share instead of holding it to until expiry.
All right. Remember this. Okay.
Yeah.
I got one last question from the floor, and I find it very interesting. So I would like to read the questions.
Yeah.
If I pass away and not yet sell the warrants that I hold before the expiry date, will Maybank buy back the warrant? Will the issuer buy back the warrant?
Okay. So if it's reached the expiry date, it will automatically be exercised. So for example, the calculation, if it's out of the money, there's nothing to do. But if it's in the money, it will be transferred to the bank account that is tagged to your CDS. So whoever that has access to your bank account would have received the money. Yeah, that's what.
Yeah. So if it expire out of money or at the money, you get nothing.
Yes.
Yeah. If it expire in the money, then it passes to your estate administrator.
Yeah.
So that's what
it's an interesting question.
Okay. All right. So we shall conclude the session. Thank you so much, Amy, for sharing with us, the basics of structured warrants. So thank you so much, Amy.
Thank you. Thank you, Shane.